1% tax on foreign income, free healthcare, and you don't even need a visa. Georgia, not the US state. The country, nestled between Russia, Turkey, Armenia, and Azerbaijan on the eastern edge of the Black Sea. In 2024, Georgia quietly became one of the most talked about destinations for digital nomads, freelancers, and remote entrepreneurs. The reason? Georgia charges just 1% tax on foreign-sourced income for individuals under its small business status. That's not a typo. 1%. No complex offshore structures. No golden visa fees. No minimum investment requirement. You just show up, register, and start paying practically nothing. But if this sounds too good to be true, that's because the full picture is more complicated than the YouTube thumbnails suggest. Georgia's standard personal income tax rate is 20%. Corporate tax is 15%. These are not low rates. They are roughly in line with most European economies. But in 2010, Georgia introduced the small business status as part of a post-revolution economic reform package designed to attract foreign investment and simplify the tax code. Under small business status, any individual earning up to 500,000 Georgian lari per year, which is roughly 185,000 US dollars, pays just 1% tax on their gross revenue. Not profit, revenue. That distinction matters. The 1% applies to the total amount you earn, with no deductions for expenses. But for digital nomads and remote workers whose costs are minimal, 1% of gross revenue is still dramatically lower than the 20% to 45% they'd face in most Western countries. To qualify, you need to be a tax resident of Georgia. That means spending at least 183 days per year in the country. You also need to register as a sole proprietor and apply for small business status through Georgia's Revenue Service. The entire process takes approximately 1 to 2 weeks. There is no application fee. Here's where most explainers get it wrong. The 1% rate applies specifically to foreign-sourced income earned by a registered sole proprietor with small business status. If you are employed by a Georgian company, you pay 20% income tax. If you earn rental income from Georgian property, that is taxed at 5%. Capital gains on Georgian assets are taxed at 20%. Dividends from Georgian companies are taxed at 5%. The 1% is a narrow, specific benefit designed for people who earn money from outside Georgia while living inside it. For freelancers working for American, European, or Asian clients, this is the golden ticket. You invoice your foreign clients through your Georgian sole proprietorship, and you pay 1% on the total invoiced amount. No VAT if you stay under the small business threshold. No social contributions beyond a small amount. The effective tax rate for most qualifying individuals is between 1% and 3% when you include all fees. Compare that to Portugal's non-habitual resident program at 20% or Dubai's 0% income tax, but 9% corporate tax, or Estonia's e-Residency at 20% on distributed profits. Georgia's 1% is genuinely one of the lowest legal tax rates available to individual freelancers anywhere in the world. So the tax rate is incredible. But what does daily life actually look like in Georgia? Tbilisi, the capital, has a cost of living that consistently ranks among the lowest in Europe. A one-bedroom apartment in the city center costs between $400 and $700 per month. A meal at a local restaurant costs $3 to $8. A monthly transport pass is approximately $12. High-speed internet runs about $15 to $20 per month, and Georgia's average download speed is around 60 megabits per second. The country has invested heavily in fiber infrastructure since 2015. Healthcare is a mix of public and private systems. Basic public healthcare is free for Georgian residents, including registered foreigners. Private hospital visits cost $15 to $40. Georgia ranks 76th in the World Health Organization's Healthcare Index, which places it above many countries in the region. The food scene is exceptional. Georgian cuisine is one of the most underrated in the world. Khachapuri, the famous cheese bread, costs about $2. A bottle of Georgian wine, from one of the oldest winemaking traditions on Earth dating back 8,000 years, costs $4 to $10 at a restaurant. English proficiency is growing rapidly, especially among younger Georgians in Tbilisi and Batumi, though older generations predominantly speak Georgian and Russian. Most bureaucratic processes can be handled at public service halls, which are remarkably efficient one-stop government centers that process everything from residency permits to business registration. Georgia offers one of the most open visa policies in the world. Citizens of 95 countries can enter Georgia without a visa and stay for up to 1 year. No questions asked, no interview, no proof of funds, just your passport. This list includes the United States, Canada, the European Union, the United Kingdom, Australia, Japan, South Korea, and most of Latin America. After your year is up, you can simply exit the country, even just for a day, and re-enter for another 365 days. Many long-term residents do what is called a border run to Turkey or Armenia. However, this visa-free stay does not automatically grant you tax residency. To become a tax resident and qualify for the 1% rate, you need to formally apply for a temporary residence permit. The process requires a lease agreement, proof of income, a clean criminal record, and registration with the Revenue Service. The temporary residence permit is valid for 1 year and renewable. After 5 years of continuous legal residence, you can apply for permanent residency. Georgian citizenship is available after 10 years of permanent residence, though Georgia generally does not allow dual citizenship for naturalized citizens. Despite all these advantages, Georgia has not experienced the massive influx you might expect. Here is why. First, geography. Georgia is not in the European Union. It does not have Schengen access. The closest EU border is Turkey, which itself is not in the EU. If you need to be in Western Europe frequently for business, Georgia adds significant travel time and cost. Second, banking. Georgian banks have been cautious about accepting foreign clients, especially after 2022 when the country experienced a surge of Russian and Ukrainian arrivals. Opening a bank account as a foreigner has become harder. Some banks require a residence permit first. Others limit services for non-Georgian speakers. Wire transfers to and from Georgian banks can be slow and sometimes flagged for additional compliance checks. Third, the political situation. Georgia sits in a geopolitically sensitive region. Russia occupies approximately 20% of Georgian territory in the breakaway regions of South Ossetia and Abkhazia. In 2024 and 2025, tensions around Georgia's EU accession aspirations led to political protests and a controversial foreign agents law. International observers have expressed concern about democratic backsliding. Fourth, the income ceiling. The 500,000 lari threshold, approximately $185,000, sounds generous. But for entrepreneurs whose businesses scale beyond that level, the 1% rate disappears entirely. You revert to the standard 20% rate, where you need to restructure into a Georgian LLC, which has different tax treatment. Fifth, the social safety net is thin. Georgia does not offer unemployment insurance. Pension coverage is limited. The public health care system, while free, has quality concerns for complex procedures. Many expatriates maintain private health insurance from international providers. The Georgia 1% strategy is not for everyone. It works best for a very specific profile. Freelance software developers earning $50,000 to $150,000 per year from foreign clients. Online consultants and coaches, content creators, and YouTubers earning advertising revenue. E-commerce entrepreneurs who ship products from outside Georgia, writers, designers, and remote agency owners. The common thread is foreign-sourced income, modest to medium earnings, and location independence. If you are a startup founder planning to raise venture capital, Georgia is not ideal. Georgian LLCs are not well understood by Western investors, and the legal framework for equity structures is less developed than Estonia, Singapore, or Delaware. If you are a retiree looking for low-cost living, Georgia's visa-free entry and low costs are attractive, but pension income may be classified differently under Georgian tax law, and you should consult a local tax advisor. If you are a day trader or crypto investor, capital gains rules in Georgia are still evolving. Some gains on foreign assets may be exempt, others may not. The Revenue Service has issued limited guidance, which creates uncertainty. Let's stack Georgia against the most popular low-tax alternatives for digital nomads. Against Dubai, which charges 0% personal income tax. Dubai requires a minimum salary or company formation cost of roughly $15,000 to $25,000 per year. Cost of living is 3 to 4 times higher than Tbilisi. A one-bedroom in Dubai Marina costs $2,000 to $3,000 per month. Georgia is dramatically cheaper overall. Against Portugal's non-habitual resident regime at 20% on foreign employment income. Portugal offers EU residency and Schengen access, which Georgia cannot match. But the tax rate is 20 times higher. Against Paraguay's tax system at 10% on local source income. Paraguay exempts foreign income entirely if structured correctly, but the infrastructure, healthcare, and internet quality lags significantly behind Georgia. Against Estonia's e-Residency at 20% on distributed profits. Estonia's digital infrastructure is excellent, but you pay 20% when you take money out. Georgia's 1% applies immediately. Against Thailand's long-term resident visa at 17% flat rate. Thailand's LTR visa requires either $80,000 in annual income or $1 million in assets. Georgia has no such minimums. On pure tax rate and cost of living combined, Georgia is arguably the best deal available to individual freelancers earning under $185,000 per year. Georgia's tax landscape is not static. In 2025, the government announced plans to review the small business status thresholds as part of its broader EU accession roadmap. Harmonizing with EU tax standards could mean changes to the 1% rate in the medium term. There has also been discussion about introducing a digital services tax on technology companies operating in Georgia. Several EU member states have already implemented similar taxes at rates between 2% and 7%. However, as of early 2026, the 1% rate remains intact. The Georgian government has repeatedly stated that attracting foreign talent and investment remains a strategic priority. They recognize that the 1% rate is the single biggest selling point for their digital economy strategy. The National Bank of Georgia has also introduced stricter anti-money laundering requirements for all new account openings, which affects both local and foreign clients. This is driven by Georgia's commitment to meeting Financial Action Task Force standards as part of its European integration goals. Georgia is not a tax haven. It does not have the zero-rate glamour of Dubai or Monaco. It does not offer EU membership like Portugal or Malta. But for the right person, at the right income level, with the right lifestyle flexibility, Georgia offers something genuinely rare. A legal, transparent, well-documented path to paying 1% on your income in a country with excellent food, affordable living, beautiful mountains, a Black Sea coast, and a culture that is welcoming to foreigners. The 1% rate is real. The process is straightforward. And the cost of getting it wrong is low because the barriers to entry are practically zero. But you need to go in with open eyes. Understand the banking limitations. Understand the geopolitical risks. Understand that the 1% rate has a ceiling. And understand that tax laws change, especially for a country actively pursuing EU membership. The question is not whether Georgia is too good to be true. The question is whether the trade-offs, being far from Western Europe, navigating a developing banking system, and living in a geopolitically complex region, are worth the savings. For thousands of digital nomads already living in Tbilisi, the answer is clearly yes. The real question is whether it is the right fit for you. If this made you rethink your tax strategy, hit subscribe and turn on notifications. Every week, TaxMap breaks down the tax systems, loopholes, and strategies that the wealthy already know about, so you can make smarter decisions about where you live and where you earn. Drop a comment. Would you move to Georgia for 1% tax? Or is the distance from Europe a deal breaker?